I would love to be able to multiply myself. I'm out in the marketplace as myself, but maybe not as myself, with a persona that can deliver messages.
Welcome to the Fund AI Pod, a weekly podcast and video about AI usage in the asset management and funds industry. In today's episode, we interview a seasoned funds professional and dive into their personal journey with AI to gain insights and efficiencies in their workflows. This interviewee has experience at Citadel, Northern Trust, multiple hedge fund COO roles, launched and runs their own private placement agent, and has an executive MBA. This episode is brought to you by Zentia, an AI consultancy firm that helps asset managers, funds, and service providers identify and implement top AI use cases. In addition, they have off-the-shelf agents, such as their RFP Agent, ready to configure and implement immediately. And now for our main episode. Welcome. I'm your host, Iain Carey, and today I have a guest, Jeb Altonaga, who has worked on both the buy side and the sell side across Asia, Australia, and the US. We're excited today to talk to him about his personal journey with AI. Jeb, welcome to the pod.
Hey, and glad to be here. Thanks for taking the time.
Well, as I mentioned, you've got vast experience there. So why don't we start with a little bit of background about yourself, your career, and your history?
Absolutely. I'll try to be brief. Let me know if I ramble on, but originally from Los Angeles, went to school out there, went to New York often, worked with, New Yorkers on the West Coast, worked New York hours for many, many years, and was really on the sell side, and as a last role rolling into 2008, so between 2003 and 8 at Countrywide in the subprime MBS market, debt capital markets. And so rode that wave until the end of B of A's acquisition of Countrywide at the height of the beginning of the GFC and delinquencies and everything, and took the opportunity to not stay with Bank of America and transfer out to Charlotte with them in their acquisition, and received a few offers in New York and then a late offer to join Citadel in Chicago. And that was a foray, and I thought my only opportunity that was on a buy side shop, and joined. 3 months later, Citadel was down 55% given the short sale ban, and I thought that was going to be an abrupt end to my journey onto the buy side. But given the brilliance of Ken and his ability to position treasury within the fund and stay liquid, was able to keep everybody alive and wrote personal checks for bonuses to keep PMs in their seats. And obviously, we've seen what has happened to Citadel since then. That was 2008, as I mentioned. In 2011, I moved to Hong Kong with Citadel to run the Omnium platform, crossed to APAC, did that for many years. And then as one of the partners at Citadel, post the Northern Trust acquisition of Omnium, transitioned to Blue Pool Capital, which is the family office for Jack Ma and Joe Tsai of Alibaba. He moved across to be the managing partner, pulled me across to be the COO and incubate a hedge fund, Pan-Asia, long-short fundamental called Pinion with Andrew Bazarian. And I was a COO, head of risk, sat on the investment committee, and had various other hats as you do in a small boutique shop with 8 people. And we grew that to about 250 million of AUM, $100 million seed from the Blue Pool family office. And we did that for a few years until Brexit, and we were just a little bit too grossed up and net long. And so we started to receive some redemptions and eventually lost our seed. And so I stayed to liquidate what remained of that platform. And given my wife's background as an Australian, she could sponsor me down under. And there was another couple gentlemen from Citadel that worked in Australia. One was a country manager for BlackRock at the time. And there was another firm called Sandon Capital that did activism, and their industrials analyst from Citadel worked as a junior PM there. They had lost a mandate for an ODD with one of the supers, and so needed a lot of help just revamping that platform after being about 9 years in business and 65 million. So I came into the business as the COO and head of marketing or biz dev, whatever you want to call it, with a remit to redo, just like you would gut renovate a house, take out all the policies, procedures, instill institutional policies and procedures in there, and then try to accumulate capital. And once we institutionalized that, we went out and brought the firm from 65 to about 225 million, give or take. And at the end of 4 years, when COVID was at the height and the States and Europe were starting to conduct business and travel again, Australia was still going into lockdowns. And as a majority of my comp centered around capital raising, there was a little bit of Zoom fatigue. And so people wanted people in the seats. And so I made the decision, given the conservative nature of the firm and them not wanting me to travel and the fact that Australia wasn't letting me out despite many stat decks that were provided to the border force. I finally got an approval and then was shut down by my CIO. So I decided to resign, got bought out of that partnership and launched Clearglass, which brought me back to the sell side as a placement agent, working predominantly, interestingly enough, despite all of my public market hedge fund experience for the 15 years prior to that, back into a private market distribution role where I was mainly raising capital for private credit, structured credit, private equity buyout, some venture, and then, things in between, infrastructure, et cetera. And then I went to NYU and got an executive MBA at Stern. Hopefully, I didn't give you too much of a word soup there.
No, there was a lot covered, so I would love to double click into a few things there. Starting with, maybe for the audience, what is a private placement agent? What do they do? Who hires them? What's their core role?
Absolutely. So private placement agents generally have been divisions of investment banks. Some are independent. Think of it as your outsourced business development IR function. So sometimes smaller middle market or boutique fund houses will not have someone who has the relationship, will outsource strategically to placement agents to help raise them capital. And our goal and job is specific to take a mandate, have a specific fund that might be a target, that might be a buyout fund, fund 5, fund 6. It could be, private credit fund number 2, et cetera. And they go out and specifically hire the team that has been instrumental in the past with the relationships with allocators to be able to get them the meetings and advise them on the full cycle of developing pitch decks, doing meetings, mock interviews, IDD, ODD, so investment due diligence, operational due diligence, all those kind of full circle things that would come about to the placement of capital in a subscription agreement being signed. And so it could vary through all of those things I've mentioned with specific details into an agreement, or somebody just going full outsource because of one size or maybe capabilities to be able to do that. I would say it's been extremely hard to do fun ones. And so we've concentrated on the middle market, boutique firms, call it 200 million to under a billion, on say fund 2, fund 3, fund 4 with some exits so they can show DPI, a MOIC, a decent, first quartile IRR, and give them an opportunity to raise capital being a specified manager with hopefully a pedigree from one of the major shops and some LP following already.
Would I be summarizing it correctly to say you talked about the advisory side? So you're used to dealing with investors, you know what they need, the DDQs, ODDs, etc.
Yes.
Then you would need to have a large investor network to be able to connect them, to introduce them, to sell the fund. Are you responsible for selling and fundraising, or are you just advising how to best do that fundraising?
Sure. So the agreement could be either or both. Generally, we like to be the one that is raising the capital because that tends to come with an success fee just like if you think of an M&A transaction or an IPO in the capital markets, you get paid off of placing that stock or that bond that you're underwriting into the public market, and you get a fee off of that. And so the placement of funds is the more lucrative side of that business. But we also, given the need, if some of the funds only need the advisory side because maybe they have the team in place that can, make the calls and send out the emails, and they just really need a roadmap, we can do that as well. But I would say I enjoy much more, and I think our value add is in the introductions to the LPs after there is a strategy in place. Because the interesting thing about being a placement agent is the GP or the fund and the manager are actually your clients, but the only way that you become successful is through the LPs and having that LP relationship, which they are not your clients. They are not the ones paying you, but they are the ones that trust you as a placement agent to have, one, their best interests at heart, understand what they're looking for, introduce them to quality managers, and understand kind of what their needs are, what they like, what they don't like, the pedigree they like, vintages they like, whether they go first time funds, they don't, do they like going into the, the middle market or the boutiques, et cetera, do they not, do they only need household names like the Carlyles and Citadels of the world? And so you have to understand that as a placement agent and be able to cater to those LPs to be able to get those meetings for the GPs. But the GPs are your client, and that's who you're being hired on, and that's who you're signing on as a client.
And on the investor side, so two follow-up questions. One, you mentioned obviously the classification of the LPs, what they like, what they're targeting, what they don't invest. So the first question would be, are you maintaining that in a CRM system, some sort of database? And then the second question is, how are you finding these LPs? How much is your network? How much is cold calling, reaching out, conferences, etc.?
Great questions. I think I may be able to pepper in some AI components because of how I've adopted it into that process. So definitely CRM, you need a place to household all the emails, exchanges, phone numbers, notes, etc. And so I personally used HubSpot. Salesforce is a great example. There are specific CRMs that are specific to the investment industry you could use as well, like Backstop, etc. And so all of these are acceptable, right? You need to be able to have a marketing and a sales components of there. Freeware doesn't generally get you far enough. Some people work off spreadsheets. I think it's a little antiquated, being able to just filter and stuff like that. I like to have the tasks, the prompts, and I like integration. And to your AI point, which I think we'll come back around to, is I like the ability to have an LLM that can read between and work between multiple systems. So you talked about databases, right? Besides the CRM, a good feed into your CRM is a typical database like a Preqin, a PitchBook, PEI, etc., which have their own set of analysts that are going out, interviewing LPs, ensuring that, if somebody is a head of private credit at LP1 and moves to LP2, they're documenting that, they're capturing that. You want that feed to be coming into your CRM. You want to notice when somebody's jumping shop because maybe you didn't have a relationship at LP2, and now your friend Joe that left LP1 is now at the next shop. You may have an opportunity to expand that relationship. And so that's one component of it, and making sure all of those different systems are talking to each other, working with each other, capturing data. AI has been a big catalyst in removing bodies that need to ensure that data is flowing between these different systems and they're talking to each other. And so that's been a catalyst. And then the integration of that. You mentioned cold calling and cold emailing. I'm a big proponent of it only because I'm a masochist. So I still do cold calling only because I think it keeps you sharp. If you're used to the rejection component, it just keeps you humble, and it does help you build relationships. I mean, you got to understand the life cycle, right? We're getting older, and as we get older, we move to different roles, or we retire, or we move industries. And so you constantly need to be feeding the funnel. I know how cliche that sounds, but so as other people come into the industry, you want to be building those relationships so you're always relevant. And as people get promoted from, they might be heading, say, a specific industry, like, say, venture, and they move a little bit up the ladder to take all of private, say, private equity, Now they're looking across buyout, growth, and venture, and then maybe they get to be the head of private markets, and now they're in real estate, infrastructure, private credit, structured credit, et cetera. And so being able to continuously modify your relationships and be relevant, I think is key to success. And especially given our firm was 4 people, we don't have a huge C-suite of executives that are sitting on the top and then pushing commands down into the VP and associate an analyst level, and everybody working through that. So we have to be extremely nimble and efficient, and we are very niche in what we do. And so to stay relevant in that, we have to keep reinventing ourselves and making sure we're up to speed on one technology, allowing AI to do a lot of the heavy lifting for what we need to do to accomplish that. And then 3, being relevant to give our time. Most of our time needs to be at developing and building those relationships.
And you talked about using some of the AI to ingest. When you speak about HubSpot as your CRM, do they have any AI tools embedded and you're using those, or are you using AI tools like ChatGPT, etc., outside the system? What AI tools are you
Both.
using?
Absolutely. Great question. Both. You've seen a lot of the platforms, from a HubSpot to a Salesforce to all of these different CRMs, as well as even some of the databases, instill the AI into that for upgrading notes, for pushing data through the APIs, for scrubbing. One of the things I love about HubSpot right now, and not as a commercial for them, I've noticed it in there because that's what I use, is it will summarize as I pull up a name or get into a company. Like, let's say I'm looking, I don't know, as an example, Texas Teachers, right, as a pension fund. It will summarize off to the right in a note who I've been speaking to there lately, when was my last correspondence, a quick summary of what that correspondence would be, who I should be reaching out to next within there with some opportunities, et cetera. And so that's been additive. The other case scenario for AI is within a GPT and Grok, et cetera, as you're able to connect various components to those LLMs to be able, and as you develop it to your personality so it can write like you, it will, do have it attached to my email in my inbox, so it will summarize emails for me, give me a detailed summary of where is my most important tasks that I need to hit within the emails. I haven't yet, but I do know people that have used it to compartmentalize, place emails into certain folders, and then write initial replies and hold that in a draft format. So all you have to do is go in and maybe wordsmith a little bit or just review 7 or 8 emails that need to be sent out, and then you can bang that out. And that is a huge time saver. So I'm looking at enhancing my adaptability of AI to also include that. I'm just a little slower given maybe my age, but also just wanting to keep a little bit of control around that because I'm very specific with my messaging, and I think my experience and wisdom kind of gets into that. And so I'm trying to get the best of both worlds between experience and technology being an efficient driver for me. And then the movement of, say, a Preqin or a PitchBook as their databases come into my CRM as I'm paying those subscription costs for them, being able to also give me using AI to give me a high level summary of people, one, I've spoke to that have moved on to new firms, moved into new roles, or 3, where I find the most value is new people that have come in that I didn't have a relationship with that are now in allocation roles, like heads of private equity, heads of venture, heads of private credit, et cetera. And so that then can be connected back to my email inbox into my CRM. It'll suck in their contact information. It'll put in their title. If they have a mobile phone, it'll put that up. It'll automatically get me into a LinkedIn connection with them and maybe send it out. I haven't gone down that route before, but it can do that. And then get back to that email component where it's drafting an email, holding it in a draft, and introducing me and my firm to them and congratulating them on their new role. So all of these various components and moving parts, if you think about it from what it would take time-wise or manpower, FTEs, to get to that stage and have that done manually is incredibly cumbersome. And now with AI, if you can grasp it and you can have it build that functionality, you can hopefully see how powerful that can be in reducing your need for FTEs and the length of time that it takes for you to be in the market or relevant as these people move around, hit new positions, new people come into the market, new funds come into the market, et cetera, et cetera.
Tell me, is the main use of, say, ChatGPT being the summaries and drafting, or have you had an opportunity yet to look at agents and workflows in an automated basis?
Agents and workflows in an automated basis. And I'd say that's probably where I find the most benefit outside of the emails and the drafting.
Could we walk through a few examples there?
100%. For instance, so let's say we have a new mandate and we have a new mandate for a private credit shop. This private credit shop is based in Mexico City and they are making individual direct loans to certain businesses within the Latin American community. Now, their main role around there is probably looking at it from a nearshoring opportunity as North America pulls back some of its manufacturing from, say, China or Southeast Asia and wants it to be closer to home. And so that opportunity within that firm that's doing a direct lending business through a private credit component into LATAM, what investors need or would like to be in there or might have done something like that in the past. So you then can circulate through the chat box and having those components all linked together, providing that case study and analysis. I need somebody that's based in LATAM. I need investors that are okay with, maybe it's not a US dollar denominated fund, maybe it's a peso, or it could be, or exposure to LATAM. So are we going to have exposure to multi LATAM currencies? Are there hedging risks, et cetera? And as you lay out the full scenario for a case analysis and then you send it off, it then starts scraping through your databases like the Prequins and the PitchBooks of the world, et cetera, and your own database as a CRM, looking through your notes if you want to put in, an Evernote or a OneNote, whatever you're looking at or wherever you keep those notes electronically. But it then starts circulating through all those data points and finding who might be the best investors. And then also looking at other GPs that may have been similar or adjacent and what investors have made contributions or subscriptions into those funds. And so then you get a detailed target list of investors. And then what you have it do next as a use study is, say it gives you a list of 100 investors globally, right? Across Asia, Australia, New Zealand, Europe, and North America, and maybe even LATAM as another component. You go, who of these do I have relationships with? Who have I contacted in the past? Who has responded? Who do I have had other types of business dealings with? Then it resorts and it gives you, say, here's your top 10, here's your top 15 people that you may have already had relationships with who are also or have either through the platform in indications with the analysts that work there and talk to the LPs indicated that they do this, through other publications, because it'll also still scrape the journal, the Financial Times, all of the other publications that are being put out there, from Wish to Alpha or any other publications, et cetera, PEI, et cetera. And it then gives you from your list, here's the 100, and here is, say, the 20 people that of the 100 that you've had interactions with. So now you've got your top 20 prospects to go out to. You've got a list of 100 firms, and then I can go back to the client and present them, these are our top prospects for your capital raise. Here are the reasons why. Here's the data that supports why these are your top 100 looks. And there's still an ability to expand as you start getting more data in or doing the reach out and understanding what those wants and asks are, et cetera, and refining that. So it's a constant process that's reiterative, but that's a use case scenario on at least getting a target list that is relevant, has a lot of experience in where you want to be marketing and why you should be marketing to them.
That was a very good use case there, especially with the scanning of the news articles to complement it. My question would be, how do you ensure that there is Or how do you guard against hallucinations? So if they spit out a prospect for the client and they're a fit for XYZ, what steps do you have to ensure that that data is accurate? You don't want to put that in front of the client. They reach out and there's not a fit and you look silly.
Absolutely. That's another great question. I have seen, and we've obviously maybe heard examples of lawyers that have used AI to use case references that didn't exist and presented them in court and then were made fools of. Or, as you said, hallucinations. The one thing that I turned on, and I can't remember the technology aspect of it, but I could go back and look. I always have it use references. Now, maybe this is because I got used to setting up reference lists. That's the end of my papers that I had to write for my MBA and all the classes that I had to take in there and the bibliography and all of that. There was a component within, I know, GPT and Grok that will cite where the data is coming from, where it's pulling its information, etc. Now, if there's 100 references, can you check all 100? Absolutely not. But think about it if you've been in a corporate environment where you get audited, or maybe you have an internal audit team that would come to you if you sat in, some control function or something else and be like, hey, we want to sit down and talk to you about this control process within your reporting or what you do. And they will pull random samples. I will always random sample the data that gets provided to ensure that it's there. I'll also do a scan of the references, and I will only make sure I'm utilizing references that I know of. So if it's pulling something from the Financial Times, reputable, Wall Street Journal, Preqin, PEI, PitchBook, Bloomberg, Reuters, right? As long as it's something that I can recognize, and I've been in the industry for 25 years as a data or news source, then I usually, from my sample data and then just the scan of that, will go, okay, we are pretty much on target. If I see a bunch of random, this is pulled from Twitter or this is pulled from these news agencies that I have no idea what they are, with random domains at the back like .io or something like that, then that's bad data and it gets kicked out. So there's still a quality control process that us humans have to go through to validate. So you have to have your own QC process, and you can't just be blind to think that the robots will not lead you astray. So there still has to be that human component and a little bit of that experience that comes in.
And as you mentioned, transparency is key, asking it for its references so you can check it out. Effectively gives you audibility of how it's pulled its information together.
Absolutely. 100%. Very, very crucial.
You have experience across front, middle, and back office managing teams in all those areas. The examples you've given seems to suggest it's a significant efficiency savings, doing the research, pulling it together, etc. Just ballpark, what would you estimate the FTE savings would be if you, instead of having junior analysts pull all this together? How would you summarize that?
If we compare ourselves to some of the other boutiques that are out there, or even some of the majors that might be recognizable, like a First Ave, Briarcliff, etc., there are four of us that are partners in this venture. Two of them focus mainly on M&A and what you think of as traditional investment banking. So two of us are really in the trenches around the capital markets component. With that, we're up against teams that are, let's say, 8 to 10 people in nature, managing the same amount of client base and roughly having, from a KPI perspective, the same amount of calls and investment meetings. So if I had to ballpark it, at least from my adoption, and I've had my partners, because we were, for lack of a better term, more on an eat what you kill to a certain extent model within. So we keep a lot of our own production. We do give back to the parent as a partnership for marketing and other expenses. But if you can reduce your specific needs in the need of analysts and associates, you just get to keep more of that pie because you don't have that expense that's hitting your deal P&L sheet. I would say on average, as we offshore to a lot of these investment banking adjunct providers for these boutique banks, or as business gets heavy, you can flex and allow them to do some of the heavy lifting like modeling, creating lists, vetting lists, stuff like that. You can outsource a lot of that. I would say on an annualized basis, the other 2 or 3 partners on average each use 2 to 2.5 FTEs to be able to streamline some of the processes that I've talked about. I have cut that back on my ability to less than 1 FTE. So I'm running about 0.75 FTEs because sometimes I can let them vet the list of what's been produced, check the reference data, et cetera. And so I will, if that's not value add for me or I am struggling to find time, I will outsource part of that component because we have trusted vendors. And so I have went from a 2.5 to a less than 1 FTE, at least just in my specific part of the business. And I will generally run 3 to maybe 4 clients. So 4 funds that is going out to roughly 100 names for each one of those. So 400 names, et cetera. If you scale that, you think about that at someone like a Moelis or an Evercore or a First Ave or PJT that owns Park Hill, and those businesses have 100 people in private capital advisory, and you start thinking about the number of headcounts, mandates, et cetera. If my model is scalable and it's liftable into some of these businesses, you could be thinking about a savings of 2 FTEs per deal. And if they do hundreds of deals, like the FTE shrinkage that you can expect could be massive if you start to exponentially put it into larger shops.
And just to take a pivot, you completed your MBA recently, so congratulations on that. When you
Thank
started
you.
the MBA and they outlined the courses, were there any AI courses there? And yes or no, but if there
Yes.
weren't, did they add them, and how much was AI spoken about through that MBA course?
So I went very late. I started when I was 48, I think, maybe 47. So very late to the MBA game. But I think it was the right timing based on my circumstances, right? And where I was in my career and moving into New York from being from the West Coast and being offshore for 13 years. But it was a major factor. One of the things that made me go to Stern was its top 4 recognition alongside places like Carnegie Mellon, MIT, et cetera, and their MBA courses of being a fast adopter of AI. I took 3 courses that were specific to AI and machine learning in business, and I also had behavioral finance, which would have been outside of a tech-focused course, but the professor in there was a huge adopter of crypto, blockchain, and then obviously from that AI into how all of these things are integrating to make finance more efficient and where the industry is changing. And so I was very fortunate to have that. And you do see, given the rapid evolution of AI, machine learning, and that tech evolution around blockchain, et cetera, the course is being changed, updated, and added at a very frequent nature. It was fascinating, and I was very fortunate, I think, to be able to go now. Because if I had gotten an MBA, say 15 years ago, 10 years ago, et cetera, there would have been none of that to get me or to propel me to do what I'm doing now in the business. So, touch wood, I'm fortunate that the timing just worked out, and I think it was just lucky and the stars aligned. And at what I thought was going to be a very old age has refreshened my outlook on life and the ability to keep up with people that are coming out of undergrad and full-time MBAs right now.
Well done. As you mentioned, AI is moving very quickly. How do you keep yourself up to speed of the news, the capabilities, the technology?
I work a lot. I don't, not to be controversial, I'm not a work-life balance person. I think about it as a work-life integration, and so I do read a lot. I try to read more than I watch any kind of TV show, program, et cetera. That's a sacrifice I make. I enjoy reading as well, so I'm very pointed. I've adopted more audible reading, so a lot of podcasts, finding the right podcast as I'm commuting, listening to those podcasts as I'm out running 3 times a week, or I'm in the gym the other 3 times, so I'm working out 6 times a week. That's 45 minutes to an hour there where I'm captivated into a podcast or an audible book or something like that, or I'm listening to the news. I'm being very, I guess, structured around where I'm looking for that news and not just reading anything that comes across the wire. I'm trying to make sure that I'm bridging the intersection between technology, finance, and in the technology, AI, and what that means, whether it's NVIDIA and the chips that are being built, what's going on with AMD or LLMs that are coming out, et cetera, and then how that's integrating into businesses. So trying to find podcasts and news that triangulate around those 2 or 3 kind of themes, because time is precious, right? And I probably read 4 hours a day.
And to put you on the spot, any podcasts that meet those 2 or 3 topics overlapping that you would recommend for the audience?
Sure. Capital Allocators, I think, has been great, just given the amount of interviews that Ted Seides has done, particularly if you go back to some of the deal flow. Like, I think there was Capital Allocators private equity deals, that there was some good stuff. PEI does some really good podcasts. You might find 3 or 4 different components there, but that is still another one you can pick, whether you're in infrastructure, buyout, private debt, they call it. Get into that. Also, another one called Cold Call. I can't remember the name of the author, but it's professors and other people. It's based on like the cold call that you would find in a sitting in a classroom when you get called upon, but they bring in a lot of tech entrepreneurs as well as professors that are sitting in the classroom and teaching tech as well as business, et cetera. And so those are probably some of the ones that come onto my radar day after day.
One of the areas you mentioned about private placement agents is helping the GPs be prepared for investor due diligence, investor questionnaires. GPs would potentially fill out RFPs or RFQs for capital allocations. So you're dealing across GPs and LPs, and I'm kind of curious to see how much LPs are interested in GPs using AI, and then how much GPs are presenting AI as a capability or a technology that they're leveraging as a differentiator. How important is it to the ecosystem, or is it a small component that's people are asking but not necessarily wanting to dive too deep into?
Mixed. Another great question. And I think given the early innings or the early stages of that, it's mixed. You see some smaller, maybe institutions that aren't as bureaucratic, family offices, smaller endowments, foundations, et cetera, that are probably have a younger staff that are starting to adopt that more and have that in their DDQs or part of their IDD, ODD components. We are seeing that. Some of the older, larger ones that have historically been there, and not that these are specific names like a CalSTRS, CalPERS, Florida State Pension, ones that have legacy assets, have been around a long time, are probably slower in changing that because of obviously the layers of approval to change DDQs and questionnaires and things like that that run through those processes. They also want to make sure the efficiencies are there and that GP is not missing opportunities because they're too slow and antiquated, right? So think about it, if I'm a growth investor versus a value investor, the value investor might be a little bit more slower. You're, chopping up balance sheets. You're trying to make sure that you're not caught in a value trap and that there truly is underlying value that hasn't been unlocked. That sometimes takes more time. And something from that component, an AI agent is probably not going to be too additive into the questionnaire of an IDD. If you're looking at growth equity or venture and it's deep tech, advanced tech, it's chips, et cetera, they want yesterday's news is old, right? And so with the speed of what's happening, they are trying to ask more about what the processes are to identifying new opportunities and how quickly they can get there with the utilization of AI. So it's a very much a mixed bag, but we are seeing it on both sides. One, from a precautionary risk perspective, not allowing AI to take too much control that it's unchecked. To the other side, if there's a lot of growth opportunities down the risk spectrum to where it's a little bit more risky in a venture kind of component, yes, they want those people to be utilizing that so that they are on the front of technology. It's coming into their operating models, it's coming into their analysis more quickly so that they can make decisions faster.
One area that I think would be interesting for GPs is in my AI consultancy firm, we've built an RFP agent. So it can suck in an RFP, deconstruct the questions, pull from sources that are approved and authorized, draft up the responses, present it then for the team to review. Obviously, there's a few agents underneath doing each of these different components, and then it can track records of which responses were successful, which weren't, and play that back in terms of reinforcement learning, training, etc.
Yeah,
And I think
absolutely.
that's a great efficiency option for GPs to consider is you can almost have an agent for every function. And again, like you said, you don't want to lose control. So the opportunity there is it does 90% of the heavy lifting. You still have that business acumen to review, refine, and approve, but you can get a huge amount out of agents these days.
I think that's gold. I've found some GPs will be very slow just because there's maybe not enough of them. They're boutique, two or three players on the team, and their ability to respond to an RFP, RFQ is delayed, which obviously the LPs question, why is it taking longer? They have a deadline, etc. So something like that would be gold. I think in the boutique emerging manager space, given the lack of resources and not having, if you're a Blackstone, right, you have a whole department that's writing RFP, RFQs. Maybe they have 20 people sitting there. If they have this, do they need 20 people? Probably not. Maybe 5 or 7, right, that are reviewing it. But if you're a 3-person team and you don't have a dedicated, you're doing that after dinner from 9 to midnight. You're going through RFQs and then your analysis the next morning when you got to wake up and like do your normal job of trying to find companies and speak to business owners, etc. Like you can get worn out pretty fast. Something like that, and I have seen LPs lose interest in a GP because they couldn't get to a response time that was adequate or sufficient to the LP to make them comfortable to move that process faster. Something like that, as it developed, would be like a home run for some of these managers to adopt. Absolutely.
You've been experimenting now with agents, AI, chatbots, etc. You're seeing lots of development and tools being made available for people that use it. As you look at your workflows, what would be the next area that you would like to tackle or build when it comes to leveraging AI?
I can't remember the name of the movie, but I think it was Michael Keaton, if I'm not mistaken, where he multiplies himself and he has like 3 of himself. Duplicity might be the name of the movie.
Yeah,
Is that it?
I think that's it.
It might be, but on the tasks of that for the older people that have been able to see that movie, I would love to be able to multiply myself. And I think where that comes through in AI as it can adopt and think to a certain extent like us, it understands the way we write, it adopts our language and can
Persona.
be a persona of us. I'd love to be able to get to a point to where I'm utilizing that to be able to draft those emails, have maybe text message outreach through a voicemail where it'll just leave a voicemail. It doesn't have to interact with somebody in person, like where somebody will pick up the phone, but if it can have an interaction or a voicemail or record something, make a video of myself. So something like that where if you're sending out little snippets on your website as a blog post or posting it up to a social like Instagram, LinkedIn, X, et cetera, that which is multiplying and giving you some of the time back as a marketing or white paper additive, I think that's where I would love to see the next phase of where I can adopt so that I'm out in the marketplace as myself, but maybe not as myself, with a persona that can deliver messages that I would love to have out there, so that then I can be the person that takes the inbound to showcasing the knowledge and experience that I have, so that why you would want to hire us at Clearglass to be able to be your placement agent for your next raise. And I think that would be the next place that I would see a lot of additive benefits.
As you speak to GPs and people entering finance, if they're not using AI today, and obviously there's a lot of industry chat and talk about it, and they know they need to get there, but they've just been overwhelmed, what would be your recommendation in their first steps towards adopting AI?
Start slow, get somebody who kind of understands it, adopt a junior, just like junior people adopt mentors that are older than them and have wisdom. Don't be afraid to reverse engineer that. Whereas if you're somebody who's more senior, you're not used to tech, or you're not used to using AI, work with somebody who's a lot younger, going through the university system maybe right now, or is using AI, even if it's not for finance related stuff and how it works, because that is going to be at least an adjacent skill that you'll be able to pick up. That's how I kind of started, being in the uni system for an MBA.
Good advice. The second question that I had was, where can people follow you, find out more about your company, yourself, etc.?
Predominantly, I would say LinkedIn, Clearglass Capital Partners on LinkedIn, or try to add me or follow me, Jeb Altonaga. I think it's linkedin.com/Jeb Altonaga is the name. And then there's also a Clearglass Capital on Twitter. It's not as active. I try to have it connected, but when LinkedIn broke that connection, I haven't been as active there. But yeah, happy to take inbounds and have discussions. And then there's posts on LinkedIn, as well as a weekly blog of what I think are important components on clearglasscap.com. So just the CAP instead of the full capital. So that's clearglasscap.com as well. There's a blog section there that gets some components of weekly articles and stuff that I think are relevant to capital raising and the components around being successful at raising capital in the capital markets perspective.
Excellent. Well, Jeb, thank you very much for the discussion. Appreciate you sharing your journey with AI and some use cases there. Very helpful.
Thanks, Ian. It's been fun.
Thanks for tuning in. If you're enjoying these discussions on AI in the funds industry, please like and subscribe. I'm a new podcast, so it helps grow the audience. And if you have a funds AI story to share, please reach out to me on LinkedIn. It's Iain Carey, IAINCAREY. Thanks again. See you on the next episode.